Dear delegates, it gives me great pleasure to welcome you to the third edition of the world's largest Fintech Fest, the Global Fintech Fest, organized by the National Payments Corporation of India, Payments Council of India, and Fintech Convergence Council. This edition of the Fest is being supported by the Department of Economic Affairs, RBI, and the IFSCA. Thank you all for joining us, and I would especially like to thank our partners, our theme partner WhatsApp, our co-powered by Amazon Pay, our spend management partners Encash, in association with Perfios, our payments partner Cash Free Payments, and our CEO's dinner partner HSBC. Our topic for a panel discussion today is how do payment service providers aid MSMEs with credit and finance? We have an esteemed speaker lineup for this session. We have with here us today, Moderator Mr. Sushil Zaregaonkar, Partner FS Consulting Digital Technology, Transformation and Fintech, Ernst & Young LLP, Mr. Daniel Adereti, COO Pezesha, Professor N. Krishna Kumar, Dean State Bank Institute of Leadership, Mr. Sundeep Mohindru, CEO M1 Exchange. Before we start the discussion, I want to tell our audiences that we will have a small question and answer session around 5 minutes before the session ends. So you can please post in your questions on your chat window. And now please join me in welcoming this esteemed panel. Over to you, Mr. Sushil.
Thank you very much. A very good afternoon to all. Before I start, I would like to thank Global Fintech Fest team for organizing this event and inviting us to this wonderful panel discussion. I'm glad to have an opportunity to moderate this panel of financial services industry experts here with us today. Now, just to sort of kickstart and set the base and context, over the last 2 years, digital transformation and adoption has accelerated and leapfrogged. With markets opening up post-pandemic, the overall consumption and thereby the need for credit, especially for the MSME, has also shown a promising growth. Now, traditionally, banks were the primary channel for MSMEs for servicing their credit and financial services needs. And over the years, we've seen that there is still a significant gap between the demand and supply, which I believe has fueled up the growth for payment service providers or the neobanks to fill up the space to service the MSME customers, both on the credit and the financial services need side. Now, large financial institutions like banks do have the physical reach and they cover a large network. They also command a significant customer base and there's a backing of a trusted brand. But on the other hand, the fintechs have really come to the play with new and emerging technology, the agility and the ability to provide a differentiated customer experience on the front end by providing more smarter and flexible banking. Now, has this arrangement worked for all the stakeholders involved? And if so, what are some of the learnings and the challenges that we've faced? With this background, let's open the panel for discussion. And maybe my first question will be to you, Sundeep. I would like to sort of understand from you as to how you see the role of payment service providers, fintechs, and neobanks having evolved over the last 2 years. As digital adoption also has increased and the focus on MSME has also increased.
Yeah, Sushil, thank you. Thanks to the Global Fintech team for hosting us, like you said. So while you were saying this and the question you've asked for 2 years, as a fintech, I have been in existence since the last 5 years now. And let me say that when we started 5 years ago, we never imagined that the MSMEs of the country across India in so many locations and in so many numbers will actually be able to use these services of a bank or financing using fintechs or technology, within 5 years, they will reach such a large number.
Yeah.
Right. So when we started 5 years ago, our focus was like as always, 4 metros, few A cities, B cities of the country, and today the SMEs are logging in into M1 Trades platform from 1,200 cities, right? So this speaks for the adoption and the volumes.
Yeah.
That how the MSMEs have adopted the fintech across India. And if we go to any state government, we go to any central government, and this is not only in India, globally as a phenomena, everybody wants to support SMEs, MSMEs, because they are the backbone of the country in terms of growth for the next phase. So everybody wants to support MSMEs, and what better example than India, that how the SMEs have adopted the fintech as their day-to-day working mechanism in terms of the service to their customer, in terms of themselves taking financing by various means. And more important now that I'm seeing is the reasonableness in the cost of financing for the SMEs. I mean,
Yes, I
versus
think that's going to be a significant,
versus the earlier days, where anything upward of 18% used to be the cost for an MSME. Today, because of the fintech revolution, an MSME is getting financed at very different cost or very different numbers, which are revolutionary, which we have not heard of. I never imagined it in the country. So this is essentially a raw, I mean, PSPs or payment service providers, oblique the fintechs, have played a tremendous role and will continue to play a tremendous role. I was just listening to a session before this from NPCI CEO, wherein she's mentioned that the next 500 million of the population of the country will be adopting the digital means of financing, oblique digital payments, in a short span of time, and much faster than the first 500 million have adopted. So
Yeah.
it's going to be it's a welcome change, and it gives immense pleasure to be a part of this journey.
Absolutely. And I think, as we look at, the MSMEs operating from tier 2, tier 3 cities, especially, they adopting digital transformation, you're going to see only future growth, and that, sort of will fuel this entire integration from financial inclusion standpoint also is what I feel. Maybe I'd sort of, request Professor Krishna also to comment on this, because Professor Krishna, you come with a banking background yourself. You've seen the entire segment transform over a period of time. Is there something you would like to add to this?
Thank you, Mr. Sushil, and thank you all my co-panelists and also the Global FinTech Fest. Hope I am audible.
Yes, you are, sir.
Yeah, and thank you. Just to take the discussion forward, when we talk about payment service providers and the way they are helping MSMEs, we all know that when UPI once started with an overlay service of API, QR code. Even that India stack itself has done wonders. It is supposed to be the underscore 5. In fact, as per the FIS global study, that is the only. India is the only country in score 5. And when I say it is score 5, means it need to have a whole lot of things in the particular stack, be it API QR code or overlay services, remittance identifier, alternative identifiers, batch and individual payments, push and pull capability, and so on and so forth. Isn't it? So, and that itself has revolutionized much of the payment space, and slowly it was also percolating into the way how the credit, at least the productivity part of it, into collections, into so many, purveying of credit part was getting facilitated. Now, in when you are talking about 2018, even that time itself, though not on a full fashion, UPI 2 came into being. UPI 2 had far better capabilities. And even today, it's a work in progress. You can think of OD against UPI, sign in, invoice in the inbox, auto pay system, and so such features which are getting integrated into the API part of it, or further on to when we are we'll be again discussing things like ONDC or OCEN and all. So somewhere along, there is a very big change. Though technically, we are calling it as seeing many things in the fintech way of disrupting the entire banking space into a kind of a silos approach of say payment related fintech or lending related fintech, wealth tech, reg tech, supra tech, and all that. I mean, if you go keenly, it is actually many times it is in between also they are disrupting. Okay, so and especially the payment, payment was the first piece which, as we all know, that full hog, and slowly now it is helping the MSMEs to grow the portfolio. See, be it about slowly, I mean, as a banker, since you have asked, the working capital piece, which used to be the main butter of the bankers, is slowly getting creamed off. Innovative structuring of various fintech products, and that is where you find that when we talk about embedded finance options, or the integration that is required, or collaborative partnerships that are required with the PSPs, with the banks, and all are coming into play, because that is when we are talking about MSMEs. Just now, Mr. Sundeep was also talking about the trades platform. We all know that more than 50% of our MSMEs are in the export space, and so much of export receivables at stake. To what extent the trades platform could have been fully used, and all are slowly coming into play, and various innovative fintech products are getting developed, and that is where the action is going to be, and tremendously it is improving our capabilities, productivity of finance, the whole system overlays, and so on and so on. And we are likely to see this benefiting the 5 trillion economies, and so on and so on. Is the, as I was telling, the next billions and trillions have to come from that, so that is where the major action is.
So, coming back, Sandeep, to the points that you made, we see that the market trend also is that the banks and the NBFCs are also forging partnerships with the payment service providers, and that's essentially helping them develop newer experiences and also help curate products that are personalized for the MSME needs. And I think you play in that space as well. What do you believe is the role of a neobank or a PSP? And how are they focusing on the MSME side? In fact, we've seen a lot of PSPs also either in process or about to launch a neobank themselves. Do you think that this is a trend that will continue, and do you think that this is something that will disrupt the market further as we go along?
Right, Sushil. So, Sushil, actually, if you look at it, what has PSP done? PSP has benefited the bank as a financing institution. Let's take an example in trades. What we have done is that we have enabled a bank to do financing for an SME invoice that he has raised on his customer in various cities without branch banking.
Right.
With a 2-people team or a 4-people team in a bank, today he is able to finance MSME invoices across 1,200 cities that are logging in without doing their KYC, because they are enabled by KYC by Threads, and without signing any bilateral legal agreement with the SME. One SME signs an agreement with Threads platform for one-time onboarding, and he gets he gets financing from 48 banks on the platform. Absolutely. Vice versa. So if you actually look at it, it is democratized. It has opened the window the funds are available to the MSME desk on his office. He doesn't have to call. He doesn't have to courier. He just had to click a picture, get an approval of an invoice from his customer on the Trade platform, and therefore get financing done. So this is actually how a bank is partnering with a PSP. It's a true story of a benefit flowing to an MSME right on his desk with speed, with reduced cost of collection, and without going to multiple banks, oblique financing institutions for getting that invoice financed.
Yeah.
Now, similarly, if you look at it from a perspective of an MSME, I mean, earlier, before we had launched the platform, if he had to make his invoice discounted, he has to go to a bank who's known to him, who's near to his office, and convince the bank that the invoice I'm submitting is a genuine invoice.
Absolutely.
And
it used to be like
there is no dispute in this invoice, and it is approved by my customer.
Yeah.
A bank sitting in Coimbatore and the customer sitting in Chennai or even in Delhi, I mean, the banker has no means to find out physically, has the customer really accepted the goods, the quality is okay, or is this a duplicate invoice?
Yeah.
Right. So for an MSME now, sitting from his office, he can convince the bank on the screen, on the fly, by doing this. Now, in the whole process, he is leaving on the platform his behavior. That means how the customer has accepted his invoice, how many times his invoice has been rejected, for what value it has been rejected, what percentage it has been rejected, and that is actually creating a goodwill for him for the next transaction.
Absolutely.
Right. So the data is playing a very important role, which was earlier not possible because the whole transaction was happening physically, and it was maybe happening in cash mode or maybe not happening. Right. The third part, which is very important for all of us to understand, for the MSMEs to understand, is now we are not giving finance to them basis their credentials or balance sheet. Because the banks don't trust, because their financials are not made in a manner that the bank can rely, or a confidence of the bank on the MSMEs financials are limited. So therefore, now the whole ecosystem is relying trust on their customer.
Absolutely.
There is no security required from an MSME. There is no balance sheet required from an MSME to prove that his CIBIL score is good or bad. These kind of changes are possible with the fintech solutioning that has been brought in, with the partnership from the banks. And like you asked, is it going to grow? Yes, it is going to grow. In the first year, when we launched 5 years ago, we did 300 crore. Now, every day, we are doing 100 crores INR worth of discounting, right?
That's a very sizable jump, isn't it?
So in a year, we did 300 crores. Now we are doing 100 crores a day. So that's a kind of difference in the volumes that the adoption has happened, and it's not going to stop.
Yeah, it's just I think it's just gonna go, because think about it from the aberration of proving your credit worthiness to now having the ability to choose which bank to bank with, right? Because when there are 48 partner banks, the banks bid for it, right, on the platform, and the MSME has a choice. So moving from a abrasive experience to a experience of making a choice, I think it's a huge jump for the MSMEs in how they do their business as well. And in fact, some of the PSPs also are now providing so many valued services on their platform, right from helping MSMEs open a current account to curating products from the bank and then cross-selling them on their platforms. At the same time, helping them create a one single view to help operationalize the business and bring in more efficiencies. I think we've sort of seen significant change in what the offerings were for the MSMEs a few years ago to what they are now. And I think you're right, this is something that we'll see more evolution and more adoption as we go along. But one of the most important points that you mentioned is the explosion of data, right? Through the process of the partnerships and through the process of digital transactions, there's a huge data that we are witnessing that is being made available. Now, Daniel, you come from a risk management background as well. Now, with digital adoption rising significantly and the data explosion is pretty much here, how do you think data will get leveraged and monetized by the banks, NBFCs, or for that matter, even neobanks, to design customized financial solutions for the MSMEs? And what do you believe will be your take from a risk management perspective? Some of the challenges that you will face, because with the data, yes, there are opportunities, but I believe there will also be new challenges that will be thrown at us from a risk angle.
Fantastic. Thank you very much for the question. I'll probably say thank you very much to the Global Fintech Group for also inviting me to this discussion itself, and also to my fellow panelists. So I guess to answer your question, I'll probably take a very big step back here. I think one of the primary headaches that any kind of financial institution faces is trying to solve for credit risk. I mean, amidst all that kind of risk that you probably face. And I think one way you can actually do that is if you can, in a way, sufficiently identify the probability of default of your borrower, right? Now, all those things seems like very grand statements, but everything that it comes down to is, can I actually identify if this customer is going to pay me back in X period or not? And the easiest way you can do that is if you have some level of history about that client. And this is where PSP now plays a very big role. Aggregating that information and that data in a very centralized way, in a very systemic way, where for people like us that are fintechs, we can easily rely on that data set to credit score a customer, right? And not just credit score in a way to be punitive, credit score in a way to also predict. So even if I decide that a customer at the moment is a bad borrower because they probably cannot afford XYZ amount, I can easily see what that trend looks like and guess when they will likely become a good customer. So maybe relating to one of the things that Sundeep also mentioned, it kind of allows us actually segment the entire customer base. We don't actually have to lock out customers anymore. Now you can segment your customer base. Now I can understand them a lot better. Now I can actually risk profile them a lot better, apart from the traditional way of just throwing the file aside and deciding that this is just primarily a bad customer. I don't want to deal with this person. Now, one of the biggest opportunities that it does, especially for markets where we find ourselves, is, I guess before I even answer that, I remember in my finance undergrad class, when we're doing capital asset pricing model, there's a concept of risk premium that everybody understands, and the idea of risk premium is you're supposed to be labeled against a gold standard being the government, where, how risky are you than where the government sits. Now, you can easily fall into a very simple problem if you think that way, where if you divide a geographic location into rural and urban location, you can easily fall into a simple problem of assuming that since rural individuals probably don't have a lot of these operational processes that urban individuals have, they'll probably be a lot more high risk. And you can easily make that kind of hypothesis, bake it into your credit scoring model and move that way. And the process where we find ourselves now, where we are sitting on aggregated data by PSPs, kind of allows us refine that kind of thought process, right? And now allow us see customers for who they actually are, right? So like I mentioned, we don't actually have to lock our customers anymore. We don't have to profile customers anymore. And now we can just look at the data sets and actually identify, what customers will probably be a good borrower or a bad borrower to what we represent. And that's one of the biggest opportunities in this market. So we keep preaching about financial inclusion and all these nice things that we want to achieve. And one way to actually get there is if you can actually have that aggregated or systematic data source for which fintechs can actually base their entire processes on. And that's one of the biggest opportunities that we identify in this market. I guess in terms of the problem, obviously, since this thing is a blessing, there's obviously going to be an opposite side to it. And that's one of the reasons why we are very, very friendly to regulators. And one of the problems that we identify is these kind of data sources can obviously be mismanaged, right? I have a professor that used to say, numbers can say anything you want it to say. depending on how you want to present it, right?
Right.
So there's a very clear chance of mismanagement that can easily happen here. And that's one of the big headaches that I think we identify in this environment where we currently are. And one of the reasons why we actually do encourage regulators to act as individuals that control the entire movement of that data set, and even the entire output of what that data set is meant to represent itself in the market where we are. Yeah.
Absolutely. I think that sort of brings me back to Sundeep. You've also generated a lot of data and you spoke about that. To an extent that you can actually become like a mini credit bureau of sort for MSMEs, mid-size or small size MSMEs when they're dealing with each other. Could you throw some light on that and how about that's coming along? Also from a cybersecurity perspective, guarding of that data and ensure that data privacy and compliance is adhered to. What are some of the steps that you think the industry is sort of taking to ensure that data privacy is not compromised?
Yeah, Sushil, to your first point and what Daniel was suggesting, as far as data is concerned as a gold standard risk premium, over 5 years, like I said, we've collected data where the SME has transacted with for his customer.
Yeah.
Basis that data, one of my colleagues who's a specialist in credit, he has carved out a algorithm or analytics that how the SME who has come to the exchange for financing his customer invoices, how his relationship with his customer, how his risk of dealing with X number of customers or volume of business with specific customers can be used to build a behavior of the SME and basis his bank statement, basis his GST data of the country, how the risk premium can be allocated to him for his financing needs. Now today, like I said earlier, the SMEs are financed basis the security they provide. Now on the exchange today, their invoices are financed for their customer without any security. Now we are going to the next level using this data to say that the purchases that they are doing from their SMEs further down, can they be financed?
Right.
Right. So that means we have the data of their customer behavior. We have the data of their bank statement in terms of how they manage their cash flow. We have the data of their GST in terms of their compliances and purchase and sales. And basis that, can they be financed on an unsecured basis without any collateral or security for their business needs, for short-term financing for a specific transaction?
That's right.
This is the experiment we are doing on TREDS M1 under the regulator sandbox. And
Yeah.
3 banks are participating in this, rather now 4 banks are participating in this sandbox. And touch wood, this is giving positive results about using this credit analytics engine and therefore taking a risk call on the SME for his purchases from another SME. So therefore,
I think this will open a huge opportunity for banks, which is currently untapped, because a lot of this comes back to data and how do you sort of monetize it to the best of the ability, and at the same time help these MSMEs with financial services. Yeah.
So build the confidence of a bank on the databases for the SME, and therefore he can do financing. Something what Daniel was saying.
Yeah.
Now to your second question, which is about protection of data, privacy. Yes. One has to be very, very careful in the current economic environment and the current structure that we keep hearing. We are a regulated entity. We have to comply with the regulations, technology and security regulations given by the regulator. We are subject to the external audit, whether it's vulnerability testing, whether it is any other exposure norms that we are supposed to protect ourselves from. And the data on the platform is fully encrypted to maintain the privacy. And our agreements of onboarding, whatever it entitles us to share about the behavior of a supplier with the bank, is something that we share. and something what we are not entitled to, we have to protect it. So to that extent, we are driven by the regulations, we are driven by audits, and so far so good. I mean, things have gone well for the whole process.
Perfect. I think, just sort of moving a little beyond credit itself, if you look at some of the market trends, we've seen that not only neobanks and PSPs, but even traditional banks have gone a step further to address some non-banking needs of the MSMEs. For example, adjunct services or providing services beyond banking on the platform is something that we see as an evolving trend. For example, ERP solutions, payroll solutions, or for that matter, even tax solutions. We've seen a lot of action from banks and neobanks and PSPs on this space. Professor Krishna, how do you see this evolving in the future? And do you think that these partnerships will sustain in the long run, and will they go beyond the basics of credit and also sort of get attached into the other financial services which are adjunct in nature to the banking services?
Absolutely, absolutely. I feel so. That is the kind of path it will take. Ultimately, if you look at, we are trying to curate the customer journey here. And when we are talking about, we were discussing the curation part. And the customer journey obviously has, not just the element of credit. You have a compliance and many a time compliance cost attached to it, isn't it? And
Yes.
so obviously a lot of innovations are, in the pipeline are already there. See, for example, BNPL was a product yesterday, but now you have a lot of other products. Save now, pay later, hold now, pay later, travel now, pay later. So these are a lot of sliced and diced products. For example, hold now, pay later could be a good model if you for the taxation purpose that you're talking about. Just when an invoice is raised, not that you are just holding the payment, but you're not paying it. I mean, now, unless the invoice is paid by the supplier, you are not going to pay it till such time it is in the hold position. So many such pipeline way of looking at it is possible, and somewhere a lot of curation of customer journey is happening. That is for sure. And many API solutions are coming into the and as we were discussing, a lot of new banks have already emerged in the space beyond just credit. Look at UB or BharatX, Nero, Fitbit. You have so many such models, which have scaled up into beyond just the credit, but it has got compliance functions in it, or payroll, and so on and so forth. Right? So, kind of an ERP level or neobank, full-fledged neobank level, they're trying to bring up. Somewhere these journey will continue, and I have a feeling this the embedded kind of finance, the way it is disrupting, will go the full throttle, and it will not just stop at credit of MSME. It will go into compliance aspects. It will go into so many other aspects as well. And because that is a kind of a required solution, and they are plug and play way of looking at it, allows them to innovate in these spaces and solid solution. So that is how the whole journey is.
I think this also a lot from the perspective of what the government has done, Professor, and
Absolutely. Yes.
from a perspective of looking at some of the initiatives in order to sort of making data available to lenders and financial services, be it
democratization of data element, the way it is coming.
Absolutely, the account aggregators, or the Open itself. I think there's a lot of new models that will emerge, especially with ONDC, right, and then banks sort of coming on board now. You will see the
Open Easy also, the Open Credit Enablement Network. So that again is is in the works. And actually, when we are talking about ONDC, it has got 3 layers, as we all know. And it is likely to push this envelope further from UPI to OCEN to API. So the entire stack, ONDC stack, has got all these three elements, and somewhere along, it is going to bring on board the account aggregators on the one side and the way of disrupting both the retailers, or be the big retailers or the smaller kirana stores. So that's the entire stage they're looking at it. And
So, Sundeep, what is your take on what ONDC is offering, or for that matter, even the Oaken framework that Professor alluded to? Do you see that getting embedded in the sort of work that you are doing, and how about do you think these initiatives will help scale the business further? Your point of view on that?
Yes, right. So Sushil, actually, let's say an Oaken network or an account aggregator network, that is going to enable us to do all the innovation further on the product that we've already built. So like I said, we do bank statement analysis in the next cohort that we are doing. Now that is going to become smoother and faster with AA becoming fully
Yeah.
active in the country. All the banks becoming active on AA, then for us building the next level evolution for invoice discounting is going to become more smoother and faster for us. Similarly, on the ONDC or any marketplace for that matter, which is coming up in the country, uh, the data that is going to get generated on the marketplace, like we are utilizing the data for creating the goodwill of the SME, that marketplace is going to enable a lot of data, which is going to be utilized for the benefit of the
Yeah.
buyer and the seller. So and today, sitting on the Facebook, sitting on the any other social network, we are able to buy and sell.
Yeah.
Like this, for an SME, ONDC hopefully is going to become a Facebook, which is free of cost for him.
Yeah.
And
Yeah.
just by logging in, he is going to make a shop, and he doesn't need a physical shop anymore.
Absolutely.
Many times it gives me a thought that would physical shops eventually carry a premium in the market, let's say 10 years, 20 years from now? Difficult to comment. But one thought that comes to mind is if the marketplaces are going to enable so much of different experience,
Transactions. Yeah. Yeah.
and even the consumer behavior on the marketplaces, I mean,
Absolutely.
because of technology, is enabled in a manner that you can wear the shirt artificially and imagine how would you look wearing the shirt. Would you really need a physical shop, and will that shop carry demand in the future?
Yes.
Right.
Yeah.
So it's going to change. Many things are
It's
going to
gonna
change.
change. It's anybody's guess. It could possibly be a premium for you
AI
or
and
for the
VR.
Yes.
That's very interesting. And Daniel, maybe while some of these initiatives might be a little new to you, what are some of the global initiatives that you've been a witness to, or something that you see happening more closer to home in Kenya? Do you see some specific trends that you believe draw parallels from what's happening here in India, and something that you believe globally that is yet to sort of come and understood the market?
I think the answer is yes. I think there are two big trends that we are currently seeing now. The first is around data management itself. So the government's incentive in enabling cleaner data management, and one of the things that has been introduced in these markets is for every partner that is handling data in any kind of way, particularly for financial institutions, now we have to register as a data controller, because heavily
Okay.
our business model obviously relies on the level and the information that we actually do get. So now we are benchmarked to stress tests like Sundeep mentioned around how we're actually handling information in these markets and what exactly we're using that information to. The second trend that we're also seeing here is partnerships with traditional banks and fintech. I think at the very beginning of the fintech evolution in Africa, I think one of the things that we were clearly afraid of was if the traditional banks were actually going to end up swallowing up fintechs itself. And now we are getting to a stage where there's now a lot less competition a lot more collaboration, right? So traditional banks are now playing the role of financing partners. So for ourselves like Pezesha, for example, now that we have demonstrated a clear case of being able to sufficiently understand credit risk, using the size of information that we're able to access, and reducing the cost of accessing this information itself, it makes a lot more sense for a traditional financing partner to want to work with an entity like Pezesha, right? So they just provide liquidity, and we deploy that liquidity in particular portfolios that we identify that this can actually work for. And I think the final trend that we're also seeing also is in a lot more cleaner way of handling risk management. So, based on what I mentioned earlier, I think we're heavily wedded to traditional finance thought processes around, thinking through emerging market risk and developed market risk. But now those things are now changing. Now we are now able to understand underlying credit risk for a rural borrower. In the past, we were not able to do things like that, and we're subjecting that borrower to a traditional financing system where the operations doesn't directly work for them, either because there are no branch operations in the areas where they were living. But now, regardless of whatever location where they find themselves, they can actually access credits. And things like this are now being done by the power of fintechs. And we are also hypothesizing that as we go forward, as we keep bringing in a lot of these individuals into the entire credit system, now we are now growing and like an enabling capital market itself that can actually work for emerging market as we go forward. So I think yes, we are seeing trends, but we're also expecting those trends to translate to a proper financial market for the underserved markets in this part of the world. Thanks.
In fact, you've sort of developed a sizable customer base. Could you sort of shed some light on how you are curating products for MSMEs? Basis their segments, right? You also have embedded finance as an offering, and the supply chain financing. So some sort of these solutions might be specifically curated for a particular customer segment. Do you think that approach is something that you want to sort of carry forward with? And when you do that, are you sort of creating some differentiated experiences, customer segment wise?
Yeah, I think the answer there is yes, and I'll probably talk about the embedded finance product. So let me give an example. We have let's say a merchant partner called Trigger in this market. Trigger will be very similar to an Amazon, for example, right? Okay. Now the differentiated experience now comes in if I'm a Pezesha customer that is working with Trigger, I no longer have to access a bank to take credits to actually buy on Trigger anymore. I can easily just come to Pezesha. Now, how did Pezesha and Trigger solve for that? That's where embedded finance now plays a role, right? So my technology is embedded into the Trigger's technology. And just because of that integration, a customer has just one customer-facing app that can translate between two different models at the same time, right? And what Trigger trades in is fresh produce. And fresh produce is how most people that are in rural areas make their daily living. So it means that for someone that is in the rural area, you can easily buy 3 days worth of goods on the Trigger platform without knowing who the financier is, and run your daily operations and pay back that credit and take subsequent credits itself. And that's one of the biggest usefulness of what embedded finance has played a very big role in this market of trying to help us solve.
Right. So I'm just a little conscious about time. Sundeep, I have time for one more question, and I would sort of like to end the discussion on the panel with you. We've spoken about a lot of opportunities currently, and we discovered that this market is going to grow and there is enough headroom yet to exploit. But if I was to sort of think about the challenges that lie in front of us from a growth perspective, what would they be, and what would we need to watch out for?
Yes. So Sushil, one of the biggest challenge that we faced so far was the way the banks looked upon fintechs, and that change has happened for the good. Now the banks look upon fintechs as partners. In the initial first 2 years, I had to spend so much time with the banks convincing them that they can finance an invoice on a digital platform by looking at the invoice, the genuinity and the approval, they could do it versus
The adoption itself.
yes, right. And how should a credit team write a risk on a invoice which is received digitally? And when the invoice comes, the bank is enabled to bid on it within minutes, not in hours. And the legal documentation is giving them comfort that this is enforceable in the court of law. Now, all this ecosystem has been created. They have witnessed it. Almost 95,000 crore worth of transactions have happened successfully, and now I feel delighted to say that the default on M1 is 0% in 3 years.
Wow.
Right. So with this kind of volume and this kind of default, now the bankers' outlook towards the whole process has changed. They come forward to participate more and more. So I don't see that challenge anymore, which was a challenge for us just about 5 years ago and 4 years ago. The next challenge that I see as a behavior is in the government entities adopting this digital means of financing for their suppliers. Like the private sector world has come forward, the government world, the PSU world, the enterprises, the public sector enterprises world, their adoption and their behavior change is something which will happen hopefully in the next few years, which will then actually the whole SME ecosystem working in the country will be able to benefit from. That's one. The second point, connecting from what Professor Kumar was saying, is the import-export. Looking at the success of the TREDS platform, the government has now allowed us to set up import-export financing specific platform from the GIFT City. And with that, the financing, the supply chain financing complete needs would be completed for the country. Import, export, government. I think we've run out of time. I'll end up and leave on to you.
Perfect. I think we've come to an end of a very interesting panel. If I was to summarize, we feel that the partnerships between PSPs and neobanks and traditional banks will further grow over the years. There's going to be a lot of data. Data explosion is going to be something that we'll have to live with. At the same time, how do you synthesize and leverage that data for more personalization and more financial inclusion and credit growth is something that we need to watch out for. Cybersecurity from perspective of compliance and risk, and lastly, the challenges around adoption itself. So thank you very much to all of you, and this brings us to the end of a wonderful panel. Over to you, Vedi.
Thank you, esteemed panel. It was really an interesting discussion. We have a few questions that have come up, so just give us a moment. We are going to post them soon.
It's one of the sessions which I have attended, which has happened at the right time. It's a good tea, coffee time, and I'm taking the liberty to enjoy it along with you guys.
Okay, I think the first question is, what is the current situation of SMEs after being aided by MSMEs? Maybe Sundeep, do you want to sort of comment on it?
Yes. See, on a M1 platform or on any TREDS platform, whatever is the size of an MSME, it does not matter whether it's micro, small, or medium. Everyone is getting financed. Like I said, there is no focus on the balance sheet or the size of an MSME. There is no focus on his credentials of CRILIC, CIBIL, etc. There is only focus on his customer, and basis that he's getting financed. Now, like I said, micro to small, if a micro is working for a small MSME, that invoice is also going to get financed on TREDS. We've already started that under the RBI sandbox basis the data analytics of the small MSME and not on the data analytics of the micro. So this is going to be a golden time for micros also to grow and become smaller.
Right. The second question was more around how fintech can be introduced in micro businesses. Now, I think this is a question maybe I would like to direct to Professor and Daniel both, because you've both played significant role in this space.
Absolutely. When we talk about micro enterprise, we all know that in the MSME space, the micro is more than about 80 to 85% of it. So that goes without saying. Just now, Sundeep was telling that whatever innovations that are being coming forth, they are not looking at only for the bigger lot of MSMEs. So generally, the lot size or the number wise, the micros are the bigger ones. So obviously, the solutions also there is are more for the micro enterprises. Just to say that a micro enterprise would prefer equated daily installments instead of an equated monthly installment. So so even that small thing matters. So like that, each of these innovations are majorly targeted at the micro enterprises. There is likely to be obviously a data issue, though we are talking about reading from so many data points. All the reports have talked about it is that when it comes to micro, the data points are not that stabilized as of now. That will be a challenge, and all those regulatory concerns and the governance issues could be a challenge. But broadly looking at it, I see the bigger opportunity is very much there in the micro space.
Right. Daniel, do you want to comment?
So I think I also touch on that. I think I'll further divide the micro segment into two. So the formal and informal, because I think the behavior there is also quite different. And just to touch on one of the things that Professor also mentioned, I think the game here is you clearly have to understand that you really can't treat these individuals as small or medium scale businesses. So that's the first bit. The second bit is you also have to curate financial products for them. So one of the things Professor mentioned was understanding that most of these guys are going to be averse to a monthly product. They will probably work a lot more with a daily product because that's how their business operation is created. So if you're a fintech that wants to work in that space, two things you just have to figure out. I think Prof touched on those two major things. One, figure out if they have steady stream of data. Then two, figure out, a product that actually does work for them, as opposed to, the broader stream of every other kind of businesses.
I think there is, just to add to that, there's also a lot of work that the PSPs and the neobanks are doing in trying to bring the fintechs to the micro businesses. So when you partner with some of the banks and the neobanks, or for that matter PSPs, you will probably get access to some of the fintech solutions that were not available for the micro at an enterprise level. And also this gives an opportunity to embed them into the business to improve your overall operational efficiency, or for that matter, even simple things like connections to ERPs, or for that matter, integrations with HR systems. Those are the sort of things that you will find taking shape in the form of beyond banking offerings from the banks.
Thank you so much, sir. It was indeed an enlightening session. We would like to close here. I want to really thank all our esteemed speakers, moderators, and our audiences. It was an honor to have you here for the Global Fintech Fest 2022. I would also like to thank our partners, our platinum partner, Google Pay, PhonePe, Visa, M2P Fintech, MasterCard, and Falcon, and our registration partner, Entity Data and Payment Services. Thank you, everyone. Have a great day.
Thank you. Thank you very much. Thank you.
Bye.